Hello and welcome to another episode of Test, Optimize, and Scale. We're going to be talking blockchain real estate today as we have Yael Tamar in studio with us, CEO and co-founder of SolidBlock. Yael, pleasure to have you on the show.
Hi, Jason. Thanks for having me.
Absolutely. I had a great time on your podcast about a year ago. I know we've been having discussions, looking to get you on Test, Optimize, Scale, and today is the day.
So excited.
And thought we'd begin with your background, your story, and be able to talk about your path from there into SolidBlock, into the world of blockchain. But could we begin with your background?
Yeah, absolutely. I understand. I guess the premise, Test, Optimize, Scale, is heard by different founders and business leaders, and I'd love to kind of share something maybe unique that I've taken from the industry and the approaches that we've taken in order to get our new technology forward in a totally new industry. So that's I think one of the reasons why we've been able to kind of push forward in the new industry is the background of the founders of our company, right? SolidBlock. So myself, I've been moving from in between kind of these sectors of finance. I studied economics at Hunter College, New York, and I started on Wall Street as my first job at a broker-dealer as an analyst, moved more into financial analytics through M&A and private equity, and then also IPO, prospectus, and underwriting. And from there, I moved into structured products. So always within the areas of finance, institutional finance, corporate finance, capital markets, and so on and so forth. And all throughout, I moved to Israel in 2005, and I caught this entrepreneur and startup bug early on. And in the beginning, it was basically through the M&A activity. So we'd work. I worked at a boutique M&A firm, and we would analyze different companies for VCs and also for large FMCG groups and hedge funds. And so my work varied from looking at agricultural farms and distributors of tea, and then a biochemical venture, for example. So it was varied, and I kind of learned early on different valuation techniques, for example, and I even kind of pioneered something at one of the firms on how we're gonna how we value early stage startups, for example. So basically, long story short, this kind of brought me to the tech field, and I became more and more ingrained into PE and venture capital, and was scouting companies for a VC and private equity firms where I was working. I got exposed to a lot of fintech, which became super popular in Israel, like around 2010 and up. And so when I went into entrepreneurship, it was natural for me to get into fintech, and then blockchain, as a matter of fact. And so I've been in blockchain since 2017. I had a strategic consulting and marketing agency, and then joined my partner at SolidBlock. And finally, I'm here as the CEO and co-founder of SolidBlock, and we provide issuers, security issuers and brokers with a platform to issue, trade, transfer, collateralize, and aggregate securities in a digital format. So essentially digital securities compliantly and seamlessly. So I hope that answers the question of the background.
Absolutely. So hearing about your beginnings on Wall Street, broker-dealer, M&A, IPO, prospectus, into that whole world of finance, institutional finance, moving to Israel in 2005, and learning about the agricultural deals, the tea distribution, biochemical, and you even built your own models for valuations, got deeper into the world of private equity, fintech, joining the blockchain space in 2017. And I know you are a key influencer in this world, and hear about you with other groups that we speak about regularly, into the creation of SolidBlock, first in your partnership and with your firm, that was more on the marketing side, and into the development that allows issuers, brokers to be working in the digitalization of securities compliantly. And what that allows for, the type of assets, the type of verticals you're able to play an impactful role on as a result.
Yeah, that pretty much sums it up. Thank you, Jason.
Yeah, just recapping
you're
it
listening.
there. Just like breaking it down and throwing it back, highlighting a few areas that I had heard for listeners, and making sure I'm getting it down right, of course, here too. Now, at SolidBlock, you guys focus on real estate. What types of real estate? Why real estate? How did the focus of these securities get centered around that space?
So, Jason, we kind of have to go back in history to 2017, where the world has learned about this new way of financing and new way of fundraising associated with digital assets. So a lot of companies were raising funding through some sort of a token, which represented the economic rate in either a company or in a future platform of some sort. So eventually, the U.S. regulators have actually prohibited this type of activity, which was, I think, maybe late 2017, early 2018. And even before that happened, I thought the writing was on the wall, because I've been in the security space, and I was kind of, for many years, and I was kind of looking at this new phenomenon. First of all, recognizing the power of this new blockchain technology or infrastructure that allowed for the ability to buy the rights to a certain company or asset or platform, right? So to be able to benefit from economic value of something, right, that you believe in. So I recognized that was a super important development in the tech space, because literally, like, it incentivizes so many users of platforms to kind of participate and invest and help the platform grow. And then later on, when it goes public or IPOs, can benefit even further, right? A different way to invest in a way. But on the other hand, it created a lot of, because it was outside of regulation, created a lot of issues, of course, and people taking advantage of it. So that was kind of going back in history. So then what happened next was, we understood that the SEC was reviewing the process, and it was about to say that this is not compliant, and is not a process you could use legally in the US. And I was like, wow. So you can still use the same technology to allow individuals to participate in the economic interests of something, of assets or companies, but you can do it in a compliant way. And so, I'm pretty familiar with the regulations. I was part of the broker-dealer early on, and just in general, hedge funds, PE, and so on. And most of the clients of the companies I worked with were sophisticated, accredited investors already. So we knew the regulations. So I was like, there's still a big market out there. In fact, it's a much bigger market than retail investing in private assets, known as crowdfunding. Credit investor funding is a big industry. You can still use the same principles to allow investors to come in and buy rights to dividends or interest, and then sell it. So that was the first kind of realization that this market is coming. We got to jump on it before anyone else. And the second realization was kind of deciding the industry where to work, because you asked me about real estate. how we decided on real estate. This decision came through research. I looked at different sectors, and I looked at secondary market for stocks, for example, and I frequently get offers to, buy stocks on of pre-IPO companies, and usually these are some sort of a syndicate or someone that bought the stock early on and now wants to resell. The prices are uncertain, and usually 2 or 3 times what you think they should be worth. The fees are very high, and so at the end of the day, you don't know whether what kind of ROI you're actually going to be getting. So this would be an interesting market. But there already are platforms out there that facilitate this, off the blockchain and maybe also now on the blockchain. And back in 2017, like this was an interesting market, but not interesting enough to go into. And then on the other hand, also pre-IPO companies do not do distributions of dividends, for example, and they rarely issue bonds as well. Like non-public companies don't really issue bonds. High-tech companies don't issue bonds to investors, so there's not really an interest to pay. And these are like dividends and interest are like one of the most interesting use cases on the blockchain, because the distributions on the blockchain save a lot of money. There's automatic tracking. You can subtract. You can basically put all of that into one wallet and then distribute it automatically through a smart contract. Like there's so many benefits you can provide. And so when we looked at real estate, which number one is super liquid, has the distributions that cost a lot of money and are prohibitive from bringing a lot of and make it prohibitive to bring a lot of investors into one asset, because then you have to deal with all these distributions. And everybody wants to get a piece of real estate. So you have an opportunity to, in some way, to democratize. Like instead of giving this opportunity just to certain institutions to invest in large commercial real estate, you can bring in a larger crowd. And so I had a company similar to SolidBlock early on, and then I found about SolidBlock, and we merged, and we kept the name SolidBlock because it was at that point a more established brand, having done the first ever minting first ever smart contract through which this security was issued on the blockchain. And smart contract is just a fancy word for a regular investment contract that is on the blockchain and is executed automatically through mechanisms on the blockchain. So that's basically how we came up with real estate securities real estate backed securities on the blockchain.
And like you said, with the liquidity, these are super liquid assets, with the distributions and being able to organize that, if nothing else, among the investors and bring in larger pools to these deals. And just the market itself, mainstream audiences are much more comfortable with that type of physical asset behind these digital securities than a tech startup, a new layer 1, layer 2 token that they're reading the white paper on. It's a scientific formula. They're trying to understand how real it is, the long-term aspects, where the let's say stereotypical accredited investor likely already has real estate in their portfolio, if not has a very strong understanding of what that entails. You were essentially making a more streamlined, easier process to track, to be able to have these smart contracts, which, as you said, these are the standard contracts. They're just using blockchain mechanisms. So it was a more straightforward transition.
Mm-hmm. Yeah, absolutely. For the real estate owners, it is, on the one hand, this very straightforward transition. On the other hand, there's a lot of market education, Jason, as you know, and you're doing a lot of this education, right, through the podcast and in other events and things like that. So I've also been involved in this market, and from the beginning through the education and also a podcast that we have and a course, just kind of and doing a lot of kind of board meeting, lectures to the board of directors of, let's say, large banks, institutions, and things like that. So there's a lot of that involved just to kind of get everybody comfortable, even though it's a very, very straightforward process that is based on just a very traditional securities issuance. But of course, because it's a very compliant process, and there are high stakes in this, because violation of compliance is an offense, and subject to various penalties. So it's still something that is still in progress in terms of getting everybody comfortable with the new process, and understanding that the risks are minimal because the process follows exactly to the T whatever they are doing today. But yeah, it's still an exciting new industry. So I guess it's a combination of a very old, ages old, really centuries old securities. There's always been some sort of a security issuance, even from the times of the Bible to like what we have today, which is a blockchain ledger, which is the most advanced and the most secure, highly secure technology for transferring value. In fact, despite whatever is going on with crypto right now, when you dig deeper and understand the reasons for different illegal and fraudulent activities that exist in crypto, they exist in the same way in traditional institutions as well. When you look at the underlying technology that these crypto assets are based on, is the most advanced and the highly secure tech that even, I would say, 100% of the largest banks are using today to transfer value and securities already. So now it's our turn, right, to give this value to the rest of the industry.
Absolutely. And like you said, democratize the access to these deals, whether it's through accredited investors or, through different vehicles to larger retail groups. How did you get involved in some of the first properties? How have those, played out? And what types of real estate, what class of real estate is this primarily being utilized for today?
All right. So initially, we got the first project, which was the Aspen St. Regis ski resort, through, I would say, probably the combination of luck and being in the right place and the right time. So in the right market early, and branding. So basically, we were the only ones, I believe, and definitely Yuval, my co-founder, gets full credit for that. And setting up a business of real estate tokenization before anyone else. And so, they hit it off with the asset managers doing the issuance called elevated returns. And that was the first smart contract that had the first blockchain kind of program or product, a blockchain. I don't even know how to describe it. Yeah, the first smart contract, or the first contract written on the blockchain that had a compliance aspect to it. Basically a gateway that prevented from this transfer of economic value without certain ID checks and just very compliant processes. So that was very innovative at that point in 2018. And then the whole industry followed and improved on it. So that's what I also love about our industry, is that everybody kind of keeps developing the standards, the tech standards, right? So, and that's how we got involved in the first project. And then the other projects followed. We took a year to develop a full platform, and then we brought on a family office that tokenized commercial real estate, and then a few other projects, also all commercial. And technically, you can tokenize anything. You can tokenize equity in a startup, even, and you can tokenize even, if you want to syndicate a sum of money to buy a new asset or even to build a new asset. Technically, you can do anything you want, right? You are bringing it, as long as you're bringing your investors into a compliant offering, meaning you're providing them with some sort of a mini prospectus or an offering memorandum, you're able to do whatever you want. I see that my video froze. So you're able to do anything you want with it. And so at the end of the day, what we are looking to do is to provide the most value with our technology to the highest number of clients, right? So at the end of the day, like I said, the most value is in the yielding commercial real estate because of the distribution aspect, because of the reporting. That's where the issuer is able to derive the most value and the most value for the money, for the costs that they are investing in the compliance aspect and everything related to the offering. And also for the investors themselves, they can invest and get income, ongoing, stable, passive income through these securities, and facilitate whatever need they have for liquidity by investing in a mix of different types of products.
Be able to have that diversification. And yes, the most value, the yield from these commercial real estate projects. And I know we're just scratching the surface. You guys have properties in London, Panama, Israel, various locations in the US. You are one of the groups that are putting this theory, this concept to life, showing value on all sides of the marketplace, from the issuers, the sponsors to the investors themselves, and having everything live in these distributed ledger systems. I know that you're also involved in the travel space and with NFT Stays, and being able to utilize your technology in that world as well.
Yeah, absolutely. So we kind of dabbled into the NFT space when NFTs were all the rage. And we discovered that NFTs have much more value beyond kind of the marketing tool, and that we can use the technology, which is slightly different. And I'll be happy to kind of quickly explain the difference between the, non-fungible tokens that are used by us and others to tokenize some sort of a utility in the asset, like rent, like hotel stays, leases, agreements, and so on, right? So agreements to use a property. That's basically what the NFT is. It's a smart contract. Why is it smart, by the way? Why are we using the word smart? It's smart because you can transfer it without an intermediary, because you don't have to go to the owner and say, I am selling John my hotel stay. I can do it, I can do it on my own, or I'm selling John my 2%. I can, a stake in your business. I can do it on my own. And that's why it's smart. And also it's smart because it pays dividends and interest automatically. So that's the beauty of the blockchain. And I hope that people eventually it sinks in. It sinks in how beautiful and powerful this tool is, right? The smart contracts, as opposed to the regular contracts. And so we
decentralized and automatic. Yes.
Yeah. I mean, decentralized is also kind of a misunderstood word. I prefer to use disintermediated, even though it's a mouthful.
Disintermediated. Yes.
Yeah. Because we are a centralized platform, and you can technically make changes as an issuer, and this is something you need for compliance purposes, but it is decentralized in a way that any changes you make in the system, and any updates to the offering memorandum, for example, any distributions you make, or any interest dividend, everything is recorded in the system. So that's also something provided by the blockchain, but it's centralized in a way that you still have control of certain aspects. But on the other hand, it's disintermediated, meaning an investor that wants to sell their stake, and there is a buyer who is fully compliant, can actually buy it without the intervention, right, of the owner. So that's the beauty of the system. And yeah, what was the question?
Just getting an understanding of what's happening at NFT Stays, and some of the distinctions from the real estate marketplace.
Yeah, so the NFT Stays is the ability of a buyer, a traveler who wants to stay at a hotel, maybe doesn't even know when they want to stay. Let's say they see that there is an NFT on an NFT marketplace representing hotel rooms in a hotel that they really like. It works well for like specialty hotels, or they know they come to Soho 5 times a year or maybe even once a year, so they're pre-buying these rooms, and they can redeem them if they really want to go and stay. They redeem and they order the actual stay for an actual date on the hotel website. And if they for some reason are not going to New York anytime soon, they still have it as an asset which they can sell and resell to someone else, right, or gift to someone else. So that's basically what a non-fungible token is. It's they are issuing only a certain number of those, and you can, as a hotel, you can give a lot of perks. Maybe it's a special room, maybe it's a special occasion, maybe it's accompanied via some sort of a holiday gift, or meeting with a celebrity, or whatever you want, right? Or there you can be really creative with your marketing team to do this. So that's the non-fungible aspect that we have since then utilized for a variety of things on the platform, and that's basically the reason we developed this in general is because with our regular security token, a lot of times the property owners, they add perks. So if you're buying a piece of a hotel, they want you, for a larger investment, to come and stay there, to give you free rooms. And so we developed it initially as a companion product, and then the issuers wanted it as a separate product. So that's what we did. But at the end of the day, like, if you're buying through this super high-tech process, right, on the blockchain, you're buying a stake, or I would say value, economic value in the hotel, and then they tell you when you want to redeem your 3 free nights to email the hotel staff, and then or call them on the phone. It just doesn't sound like there is that's the 2022 way to do it, right?
Sure. And how do you see this all evolving? 2025, 2030, I imagine you have a long line of prospective partners who want to get involved, from real estate funds to different hospitality groups, companies with, short-term rentals, probably even a, single family home, and various types of multifamily, warehouses across the board. Based on your pulse on the industry and the discussions you're having, where do you see the future of the space a few years and even beyond out?
Wow. It's hard to say, Jason, because the space is going so fast. The funny thing is that, I made the plan for our product back in 2019 and wrote down, like, here's what we're going to do in 2020, 2021, 2022, 2023. And the funny thing is that, like, number one, we're super on target. And number two, the whole industry is moving in the same direction and is talking at the same things at exactly the same time. And I'm not saying that to say that I'm smart or anything, but it's just basically, I took the traditional securities products that I thought would be, that I knew and that I know that financial services companies utilize based on the securities, right? The security is just a very basic layer. It's like, you cannot do, like, the whole industry of trading, lending, what else is out there? ETFs and derivatives, right? All of this is based on securities. You could not move anywhere if you were not able to securitize assets. And so, just very simply, what is a security? It's just breaking companies into shares and then being able to sell them, right? Privately issued securities don't have kind of an underwriter and an exchange that will custody the shares and then sell them to you. They will rely on contracts, right? Privately issued securities rely on contracts, meaning if you buy them, you get a PDF usually, and then this is your contract and you're entitled to certain things. And there is a risk, of course, that, the company sells, that you're entitled to a part of it. And of course, if there is no distribution, you're entitled, you have a legal right to sell the issue, to sue the issuer. But, nobody's going to make sure that the issuer will pay you the money, right? So that's the difference between private and public. Whereas in the stock exchange situation, the stock exchange will regulate all the distributions. So that's why we are disrupting the private space, right? So the more automated it is, and the blockchain enables automation, and the more transparent it is, the more you have technology kind of ensuring everybody's peace of mind and legality and compliance, then the closer the private issuance is going to be to the public issuance without the costs, right, associated with using NASDAQ. And so all of these financial security, all of these operations on top of the securities are basically such as lending, collateralization for lending, aggregation into ETFs, governance issues and things like that. The industry is going in that direction. It's basically utilizing digital securities for facilitating all of these operations on top.
And I know you are at the forefront here. So getting that perspectives on where things are going, that's what's behind it. And want to emphasize that to listeners. You can only imagine the type of conversations you're in on a daily basis around this as the appetite for these type of assets continues to increase. Very impressive to hear you're on target from your 2019 goals and how the world's changed in that window, and how even just the stigma of blockchain and using enterprise blockchain products, how they've been able to frame and word it, and how it changed in 2019, 2020, obviously here in 2022, and you guys are thriving through that. Very impressive. We're going to be applauding along the way as you hit the next goals. And again, look at you as the authority in the industry. So appreciate those details, and actually wanted to ask you a few questions to potentially package some of your insights, your expertise for other founders in the space, other similar verticals perhaps, but definitely in the industry. If a professional in the real estate industry is listening and wants to get more involved in the vertical, if it's someone in blockchain and they want to get more involved into this digital asset class, what can they test out? How can they potentially market or set up their model towards growth? What could they test towards their own goals?
That's a great question, Jason. I think that also it kind of combines the two of our platforms, ours being the tech platform and yours being, I guess, an advertising and marketing platform that's geared towards fundraising. So in our world of real estate, and everybody's always engaged in raising capital, or at least in managing their liquidity. They might have access to a lot of investors, but it takes time to bring the money in. It takes time to package the offering. It takes time to be in touch with all the investors and to have them all transfer funds. So a lot of what we're providing is an ability to turn assets into cash. So if you do all this process in advance, even if you don't need liquidity at a certain time, at a push of a button, you can basically have your investors that may have been onboarded beforehand, or will onboard in a few minutes of going onto the platform, basically buy a piece of your existing assets, and then you can use those funds to cover liquidity to buy a new asset. That's basically how things should be done in our industry, right? You take an existing asset, leverage it, buy something else, or distribute it among your general partners. So bottom line is, if anybody wants to get involved, they should bring their asset. They should use our system to onboard it. We now are testing out some automated features, so they don't require a lot of time. Real estate people are some of the most kind of no BS. We're not wasting time. We want it super easy. Don't want to learn a lot of new things. So we developed our platform with that in mind. And so we can onboard their asset in a matter of minutes, all the information, and then basically transform their value of their asset as per the latest valuation into the number of tokens that they will get into their wallet, into their account. And within certain compliance, right, and making sure that they have their offering memorandum and things like that. And if not, then we'll actually have our team provide that for them, our legal team. They will be able to start basically selling, onboarding investors and selling. They can also onboard brokers. Now, where does the marketing come in? Well, it actually is a great question because there's lots of compliance. Give myself a compliment. That's a compliment. That's a great question, Yael. So there's a lot of compliance involved in soliciting securities, soliciting investors for securities. So if issuers send out information to their own investor network or even do their own advertising through certain exemptions in the US, they actually are allowed to do so. So that's a beauty of being able to use marketing companies such as yours, Jason, DNA, that through which you're able to reach a large number of investors, even if you don't know necessarily if they're all accredited. Why? Because in our system, if they come in and they're not accredited, they're not going to be allowed to buy, right? But of course, you can do certain targeting, right, to reach those. So that's the first step. They can use marketing to solicit. Now, if they are a broker, if our client is a broker dealer, or if they're not, but they want to use a broker dealer, they want to use a third party to raise the money. So we're actually set up for that as well through different partnerships and licenses that we have. That brokers you can invite brokers, and then they will invite their investors who will be only private, only to them, right? These investors are going to stay within the broker's ecosystem until they invest in a certain asset, and then the broker will always get a commission because it's all tracked on the blockchain. So that's the new wave. I think that we're starting the new wave of broker tools. It's not something that I actually planned in 2019, but something that I realized along the way as the way to catalyze the system, catalyze the industry.
Taking those learnings, building the new broker tools from there, and you make it sound so easy, which is awesome. And I know you're very effective at this. If any founders are listening in and they, have some obstacles towards this, if they're seeing some slowdowns on their initial properties, or they're just looking at their business as a whole and need to optimize what they're doing, doesn't work right out of the gate, what are the best approaches to do so? What are the best tools, you've been able to use at SolidBlock and different, pivots you may have had, since 2017, 2019? What are the best systems towards optimizing?
Towards optimizing. So actually, that's something that you would get from the data, right? So, and the data is also what fuels our industry and everything related to trading. So we're working to provide access to a lot of the data related to the market and the assets, but also mere aggregation of all of the assets data and the blockchain effect, where you can see sometimes how popular certain assets are and how well they're trading, what is the demand, right? What is market demand? But generally, you'll see all your assets on the dashboard with all of their expected revenues, right? So assets have revenues, and some of these revenues are kept by the issuer and others are distributed. So you actually can get liquidity tools as a smaller asset manager on par with the largest asset managers, right? So JP Morgan, for example, and many others, they have tools for third-party tools for asset managers to manage their liquidity. So they'll have a list of all their assets. They'll have a list of expected cash flows, right? Revenues they're getting versus liabilities, right? Because they'll have loans. On our system, you can also collateralize the tokens and borrow again from various lenders that use actually tokens as a collateral, which is a cool thing coming up in 2023. So you'll be able to see your expected revenues, how many of them you'll be able to distribute, how many of them you'll be able to put in your pocket after, you know, having to reinvest, let's say, according to the past needs, the interest that is due, as well as you might be, you know, you might be still, you might be planning to purchase a new asset that you've been, that you've been raising for. And so you might have a liquidity gap in your planning. So at that point, you have several options to borrow money from different lenders or to sell more of your tokens to leverage some more, and all of that with appropriate risk management. So our goal in the future is just to give the same type of liquidity tools to the smaller guys and medium-sized guys than the big guys are already enjoying, right? And that's why they're able to make billions of dollars, because they're utilizing the resources they have to the max, right?
Utilizing the resources, as you said, tokenizing, having collateral based on the tokens, and leading to my next question, whether we're talking about the big guys or a smaller group looking to be able to add more and more assets to their portfolio. You had mentioned, it's all about being able to leverage, specific property, specific assets, be able to buy more as a result. What are the keys towards scale? What have been the top elements of SolidBlock scale? And for any listeners, again, on the buy or sell side, on the investor or issuer side, how can they scale as they're seeing their goals met using the models discussed here?
Right. So, I mean, for investors in this industry, there's not that much scaling because it's a low risk and relatively low return industry in real estate. So you just want to make sure you don't lose your money and you kind of manage your liquidity needs through investing in products that give you passive income, for example. For the issuers, the only way to scale really is to be able to leverage your asset to the max. And then you can actually utilize your network to sell it quickly, utilize the brokers that and syndicators that invite them into the system. The faster, like the less you do on the fundraising side and the management, the more real estate you're going to build. So we modeled it out and we saw that, any asset owner, asset manager, developer, whatever, if they're buying today an asset every quarter, or they're doing one syndication a quarter, they can do one syndication a month, right? Imagine how much scaling there will be. Buy a new asset, leverage out of it, basically sell the economic interest to the maximum, right? Let's say 70% maybe of the asset, take the money, go leverage it with a bank, buy a new asset. So you can actually scale. Like, this is a tool for them to scale, right? And while risk management tools that we're going to launch will allow them not to over leverage, for example, right? So and get into trouble. So that's the gist.
There you go. I've had a lot of fun diving further and further into your model here, your ideas towards scale, which again seems to lay out the formula in a very replicatable way for all listeners here. Is there anything we didn't get a touch on? Is there any, final thoughts, final notes that you want to leave listeners with?
I think that, well, first of all, thank you for the opportunity. And
my pleasure.
I'm happy to help anybody that's kind of getting into this tokenization world, or in general wants to is in the securities world and wants to learn how to manage and distribute their securities through platforms like SolidBlock. That's it.
And what is the best way for listeners to get in contact with you, the SolidBlock team? I know you have amazing educational resources out there, courses that take audiences through everything. But what are the best next steps for listeners that want to continue the discussion.
Yeah, if you want to tokenize an asset, we have an easy way to get in touch with us through the website, solidblock.co. Otherwise, you can find me on any social media channel or email me at yael@solidblock.co, and I'll point you to the right resource.
Would definitely recommend listeners to take Yael up on that. Yael, thank you so much for taking the time, hopping into the podcast here, educating listeners further, sharing what you're seeing in the market and where it's going, as well as just strategies on how to test, optimize, and scale for their own portfolios and whichever side of the marketplace that they're on. It has definitely been exciting and educational for me as well.
Yeah, absolutely. Thank you for having me.
Excellent. And want to thank everybody for tuning in. We'll see you next time. And as mentioned, definitely recommend getting in touch with SolidBlock here.